Hey, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take those opinions and come to your own financial conclusions and make your own financial decisions. Today is Thursday, June 16th, 2022, and this is Blockhead Traders Weekly. In this week's episode, I am joined by fellow Blockhead trader Viper XL 007, and we are going to take a look at the markets just a little bit this week, give some comments on the recent Fed action that happened just yesterday in the markets. But before we hop to that content, I want to give a shout out to the Discord, a link in the description below. Hop in there, say hello to Viper, myself, any of the other Blockhead traders. Love to hear what you're trading. Love to hear what kind of content you want to hear about on this show. But let's hop to this week's content. Viper, before we get into some of the Fed meeting and all the market stuff, I have to first apologize if we've got a little bit of background hum coming through. I'm going to try to cut it out in the post-processing, but I don't have any air conditioner going on right here, and it probably shows. I'm probably sweating. My office is probably about 98 or 99 degrees. Up here in Ohio, we are currently going through a record heat wave. The heat index the other day was 112 or something. The day before that was like 106, and it is hot here. And I'm just going to take a tiny little detour because this story, I mean, I want to say I made this up, but I just didn't. And my AC went out last week, and we had somebody come out on Monday thinking, hey, we're just going to get it fixed on Monday. It's probably a starting cap issue. We've had this happen before where it just kind of burns itself out. The HVAC guy finally came out on Monday. We had this terribly hot forecast this week, and he said, sir, can you come out here and take a look at this? And I'm going to share the photo here because I had to take it because people I don't think they would believe us. So viewer discretion advised. But right here is my friend Jerry. I've nicknamed him Jerry. Jerry is why I am sweating up here in my office this evening. He scurried his way into my AC unit and somehow found himself bridged across the capacitor, the starting cap of my air conditioner unit. And that was the end of Jerry. But he somehow managed to go ahead and keep enough of a bridge going there so that while my thermostat continued to try to start the AC unit, it completely baked away my compressor. So we tried putting a new cap in there, and that was a no-go. We then tried what's known as a hard start kit, which I had never heard of before, but after he explained it, I said, so pretty much it's just a bigger capacitor. And the guy said, yeah, it's a good way to describe it. Also did not start my compressor. We then opened up and looked at the windings and stuff inside the compressor, and they're just totally discolored, melted, overheated, just dunzo. So in this beautiful world of inflation and commodity prices, I got a nice real-world application of that by replacing the outdoor unit. And of course, it's not in stock. So we're waiting for that to arrive so it can be replaced. And that is my current disposition right now.
So, you know that there's cheaper mousetraps available, right?
There is, but they're just not as spectacular. And when I want spectacular, this is what I got.
Peanut butter on the capacitor and catch yourself a mouse.
Let's get to the stuff that most people probably tune into, not my first world problems of no air conditioner, but the Fed meeting this week. Holy smokes, has things just been so volatile this year leading up to the Fed. If you don't know, the Fed has these meetings periodically where they basically adjust the borrowing interest rate. It's how they kind of throttle the economy, whether it's too hot or too cool. They try to keep inflation under control. They try to keep the economy growing. So if the economy is too slow or too stagnant, They try to lower interest rates to spur growth, spur borrowing, spur moving money around. If it gets real hot with inflation, they start to raise rates to try to rein in economic activity and stuff to kind of keep it cooler so we don't spiral out of control. And as everybody knows, if you've turned on the news, picked up a newspaper, or even trolled Twitter or any social media, you've probably heard about inflation, labor shortages, and all those things. And so right now, the Fed is in a conundrum where they don't want to push everyone into a recession, but they also really need to start reining in inflation because it is at historic highs. Basically, inflation has never been higher in my entire life than it is right now. The last time inflation topped this, I was not even born. And so it's really quite a challenge. And this week was one of the weeks where they were going to adjust the interest rate. And before last Friday, it was largely assumed that we were going to have about a 0.5% rate hike, which is pretty aggressive in terms of Fed interest rate movements. They try to typically adjust by 0.25% interest rate movements when they make movements. Well, we had a lot of inflation numbers come out on Friday that were just off the charts. It sent the market into a tizzy, and a lot of people kind of said the Fed has got to take some stiff action. And on Wednesday, the Federal Reserve basically met and they decided to raise, in a vote of 10-1, I believe, raise the federal funds rate to by 0.75, 0.75%. So a 0.25% higher than they were expected. And actually leading up to that, I was kind of the opinion that the market was going to rally on the Fed making a 75 basis point move. And a lot of people said, oh no, if they raise the rates really high, it's going to cause the market just to drop because it's going to increase the fears of a recession and inflation is out of control. And my thesis was everybody in the markets really wanted the Fed to get aggressive, really wanted them to get hawkish on inflation because when inflation kicks in, it can get out of control. I mean, we've talked in previous episodes about crypto inflation and some of these game tokens and things like that. And so I was kind of the opinion we were going to get a rally with a 75 basis hike. But sure enough, we did. There was a little bit of a leak that came out early on Wednesday in the Wall Street Journal that the Fed was going to move by 75 basis points. The market just kind of went off to the races all the way up through the Fed meeting. Jerome comments when he came out kind of caused the market to fluctuate, but in general, it held up for the day. And then today happened. And there was a tremendous reversal. Overnight, the Bank of Switzerland came out and gave a surprise rate hike. That, I think, got a bunch of people jittery. By the time the U.S. market opened, I believe the S&P futures were already down by 2%-ish. Throughout the day, I think we were down as low as 5%. It was just a nose dive of a day. And I have various theories. I am not an economist. I've been kind of dabbling in the markets just for a couple of years. My gut feeling is that a lot of the larger money is really right on the sidelines, kind of waiting to step in. And they started doing that yesterday with the Fed rates coming. And I feel that there's a lot of sellers out there that are kind of starting to maybe panic a little bit. And a lot of today's sell-off, to me, felt a little panicky. Not quite full-blown panic, but kind of these people that are like throwing their arms up in the air saying, I can't take it anymore. I'm getting out. And so they took advantage of that kind of pump up to try to get out for more of less of a loss than they were the day before. This could just be wishful thinking, Viper. I mean, I am really kind of tired of looking at this. I actually even stopped today and pulled up a chart of the S&P of like the past 20 years, looking at monthly candles. And if I pull it up here just real quick to look at, it's just, I mean, right here, this red, this decline right here, this is all of 2022. And if you look back, you get this little blip here. Here's your Corona crash, short, fast, sweet, drop, bounce. And I mean, you really got to go back pretty far, almost to the financial crisis, to see somewhat of a decline so severe as we're happening right here in 2022. Albeit this one spanned about a year and a half of decline from the financial collapse of 2006. But I mean, I just looked at this and I said, maybe this is why I'm having such a hard time. I mean, it's been rough this year and very, very discouraging.
Yeah. I mean, so the action we've seen today, like you said, with the pump and then the sell off, in the Discord group, we kind of actually, I don't remember if it was there, but we've talked in the past about how Fed meetings have caused pumps and then they get swallowed up. And and the way I see it in my own, and this is just how, I mean, this isn't based on any study of technical analysis or anything like that, but it makes sense to me. One of the ways technical analysis and price action was described to me as the markets are elastic, and the more they move dramatically, the more they're going to spring back. But that doesn't mean they're going to spring back and start going up or anything like that. So the way I like to think of it is you have your two hands and you got a rubber band between them. One hand, in this case my left hand, is going to represent market movement or current trend, and that one's going to move at a steady rate. So right now we're clearly in a decline. So that guy is going to move at a very steady rate, slow and steady down, because that's the overall market trend. The right hand is going to be the price action. And so what we've seen is where we get days where we drop really hard. Now we're stretching that rubber band further than it thought it could go, or just putting too much tension on it. So we're still coming down, but then we're going to get a bounce up and ease that tension, and we're just going to kind of keep doing this bouncing thing. And that is kind of how I interpret both directions, I guess, of, kind of this price action. We got news, which was the Fed meeting. We got hawkish news, which spurs somebody. There's always going to be two sides of the coin. Somebody's going to see the hawkish thing and want out, and somebody's going to see it and want in. It's news. News can pump direction. And so we get that pump, and maybe it brings the too much tension out of the rubber band, and then now we're dropping back down. But it is interesting. If we look at, so I have the S&P chart up, and so we see this. So we see this up and a big pullback, and wait a second, this isn't the right time frame. And so my point is, if you zoom in on past moments, you see this, really zoom in and make it look like, current time. We have a very strong up, and then we get a pullback. And obviously this first one here was the .com bubble back in 2000. And if we go forward, the financial crisis 2008, I mean, it's not nearly as, this isn't quite exponential, but it's not as steep, the financial crisis. And I mean, some of that could make sense. Again, not an economist either, but some of that could make sense that the financial crisis was just a completely different catalyst and falling apart. The .com bubble, I think, is a lot more similar to what we're seeing today. And so the .com bubble had this excessively fueled market, and then we pulled back. And then now if we keep zooming forward, we've obviously extended far greater, but we do have a similar steady rip, and we have this steady and then just bam. But what I thought was interesting was, if we look at previous events, financial crisis, the .com bubble, we see how price levels, technical analysis can reveal, these movements. And we had the same top here that formed in 2000, and then 8 years later, we hit that top, and we get another pullback before we move on. And then same on the bottom here, we have a bottom. We just ran this channel for a decade. And so the bad news is if we carry that forward to slightly more modern times, we do see again, we see a bottom form here for the corona pandemic crash. We had a bottom here. We got all-time highs. We went back and tested the bottom of the swing that gave us the all-time high. So this is the bad news. is we're not done. And if we're looking at technical analysis, we have, maybe we could get lucky and call this swing here. I mean, this is a monthly chart, so 2 candles is pretty significant, and this is a resistance flipped. So we got all-time highs off of this swing, which means, I'm certainly subscribed to the theory that, we have ourselves another at least 11, maybe 15% more to go, hopefully to hold that top. I mean, if we go all the way back to this bottom, I mean, then that might be a little too extreme. But that is to say, we are steeply moving down, and the rubber band is bouncing, and so we're going to have weird days, or weird couple of days like today and yesterday, where news happens. People that like it do a thing, people that don't like it do a thing, whatever. But we're gonna have these bounces, and it's more noticeable to those of us who are, out here sweating it out. Like, I mean, because we want this to end, and you get a bounce like yesterday, and you're like, this is it. This is nope. Here we go again. And so it's not great news, but that's the kind of, grounding I do on my own expectations of, because those kind of news bounces are the exact emotional fuel that could get you to FOMO into something you shouldn't, or just make a bad trade, because your confirmation bias kicks in. You're like, this is the thing I'm waiting for, and always back it up with something technical to, get an idea of if this is something worth getting excited about, or if this is just noise in the chop.
Yeah, for sure. I'm to the point where I've just been so kind of disappointed, maybe, or just kind of discouraged, I guess is the right word. I'm starting to notice myself kind of reading news stories and reading things the way I want them to see or want them to appear. And so I've kind of personally stopped watching, trying to trade, stop a lot of that stuff, because I'm really noticing myself just kind of grasping for straws, and I'll fact check or kind of gut check myself, kind of the way you're going back to some of that technical analysis. And as much as I look at the charts, I'm like, yeah, like 3,200 on the S&P is probably a reasonable expectation, but I don't want that to be true. And so I'll read different stories, or I'll read a different spin, and kind of just in my mind just convince myself that there's other data out there that is telling me otherwise. And that's where you can get into that dangerous state that'll cause you to enter a trade where you kind of just do it because that's what you want to happen, not because what the data you're looking at suggests.
Yep. And I've made plenty of those trades. Like I said, this is, not to keep shilling the Discord group, but the people we have in there, and some of the even more proficient technical analysis providers in there. Like, I'll go in there and be like, and I'll have a trade set up and be like, I'm gonna do this. This is gonna happen. And then it's that other set of eyes on it, and they're like, you know what? I don't know what you're looking at. Maybe that could happen, but again, everything's a scale of probability. this is the more probable thing. And then all of a sudden, like, it just, like my glasses come off and I'm like, whoa, like I totally missed that. Like, so it's very tough for sure to not get trapped in that cycle, which is why a good community is important. So not that it adds a whole lot, but if we go back to the S&P chart here, the other thing I looked at today, Sprocket, when you called out that monthly chart in the Discord group, is I was like, well, let's look at the annual, because I mean, when we're talking like a 20-year time frame, or more, like let's zoom out, way out, and look at 1 year candles. And first of all, that was immediately more depressing than I wanted. 2022 is halfway over, and we've erased all of 2021. Didn't happen. It's gone. It just got gobbled up. But what I thought was interesting is when the data is this distilled, or this whittled down. I mean, first of all, you don't see. I mean, back to your original point, you don't see a lot of these significant pullbacks. I mean, literally, we see obviously this one. We see 2018. I mean, this isn't significant. Like, this is just kind of a. But then, yeah, we see 2008. We see 2000, which lasted 3 years. And then even going. I mean, if we keep going back and then expanding the chart, like, you just don't see. I mean, here's a little one here in 1973, 74. Whatever was going on back there. You just don't see this a whole lot in 1929 into the 30s.
What happened in 1929?
I don't know.
I don't know. I have to go back to the history books.
Yeah, let's look that. We should look that up and see what evaporated basically the entire stock market. I don't know what that could be.
Man, I wish I'd have gone long the S&P back then.
Short it. But what is interesting, though, I mean, like I said, as dramatic as this was, of like, oh man, an entire year has been washed out. I mean, if we look back here, the dot-com bubble, I mean, that over 3 years washed out, 2.5 of the previous years. The financial crisis in 2008, in 1 year, we wiped out 5 years of progress. So in that regard, like, this isn't as dramatic. I mean, it is dramatic because the valuation is so high, but 1 year knocking out another one, I mean, that is indicative of these large crash moments where we kind of erase a significant number of previous years off the book. So hopefully, as you can see here, the 3,200 level would knock out 2 years, and hopefully we just hold to that. Taking off 2 years, we'll call that a day. But
yeah, and I have to keep telling myself that candle's only half formed.
Yeah, I mean, that's true too. See this wick? I mean, maybe we're just looking at this giant wick of 2020, and we're just gonna, the latter half of this year, just rip up. Just nobody should count on that. Not financial advice.
That's it. I'm entering my trades tomorrow when the market opens.
I'm longing everything on the S&P. But I mean, long term though, I mean, this is something I've seen many people talk about, like, all about that time horizon. You can clearly see, at least, I mean, on this S&P chart, the other charts are going to show it too. Over a 20-year time frame, nobody's lost money in the market, So, but that doesn't make it any easier for some reason.
Yeah, I don't know. It's always easy when you look back and you're like, oh, the patterns are easy. But as the pattern is developing, it's very tempting to be misled and not recognize what you'll see clearly 10 years later.
Yep.
It was actually kind of funny there, Viper. You mentioned kind of jumping in when you think the market is ready to bounce there on that. I was talking to one of the other traders in the Discord, and he was asking about some of the leveraged SPY products, because there's a lot of leveraged ETFs out there which basically try to match a particular index with leverage. And so they have them in like 2x, 3x, 10x leveraged ETFs. And so the theory was, hey, we could be really close to the bottom here with this Fed news. And if you buy in to one of these leveraged ETFs, maybe you'll really get to board the rocket ship and go to the moon. And he says, well, what do you think? And I said, well, I mean, I think you know exactly what that product is. It's a leveraged ETF, and that could take you to the moon. But the thing with leveraged products are they're leveraged in both directions. So we actually chatted later today when the S&P was down about 4.5%. And he's like, yeah, pretty glad I didn't jump on that leveraged ETF yesterday.
That is, I mean, as someone who has made it well known on this channel, I do a lot of leveraged crypto trading. It hits you very fast. At least, like I've talked about in the way that I trade leverage in crypto, I'm only putting up $50-$60, and if it goes the wrong way, I literally just lose that $50-$60. I'm pretty sure it doesn't work that way on those ETFs. You just keep getting sucked out.
Yeah, but the point is the same. I actually don't want to make it sound like I'm knocking the leverage products, because I think leverage is an absolutely wonderful thing. But you have to know what it is and what it's capable of.
Yeah.
It's, you don't give a 2-year-old a giant knife that carves the Thanksgiving turkey until you actually understand what is this thing, how do you use it, what is it, where is it useful for, where you got to be careful. The same thing goes for those leveraged products and leverage in general. If you know what it is and you know what it's capable of, and you set your expectations to manage that, they are perfectly fine to trade in. One other observation I had, Viper, when it was coming to the market drop today, leading into the Fed, from the inflation numbers that came out last Friday, the S&P really dropped to a new low, recent low in the past, 52 weeks. And the Fed meeting came out. We rallied up to kind of not new highs, but we rallied up quite a bit off of that low. And then today I noticed that we really, broke right through where that low recently was, and we made new lows. Which, okay, that's wonderful. But, you and I both also kind of follow a lot of the cryptocurrencies, and we, particularly AVAX, although I believe this similar phenomenon occurred in other currencies, because after that kind of inflation numbers and everything through the weekend, cryptocurrency also went to kind of its 1-year lows, really, really dipping down there in the prices. And the Fed meeting came out, everything kind of rallied. Crypto was rallying, stocks were rallying. And then today, while the market was really selling off, I noticed crypto did sell off today. That's true, but it did not make new lows, which I thought was relatively interesting. It moved in the same direction as the market, but in my opinion, it wasn't really the same magnitude because we didn't make new lows.
For the most part, yeah, definitely. I mean, I saw the same thing. I have a few thoughts on perhaps why that is. And so if we go to some charts here, we'll start with Bitcoin, since that's kind of, the thing that everybody likes to measure as crypto. But we'll work our way down to AVAX, like you said. And what I find interesting, first of all, just flipping through the three, we'll look just at three: Bitcoin, Ethereum, and AVAX. I've been watching this for quite some time, and I've identified, what I call this cliff. And real quick, flipping through, we see Bitcoin has this cliff. I'll explain it here on Bitcoin, which is to say, when we got our first and then second all-time high pumps here, we basically launched from this yellow cliff level. We came back, we tested, we went and grabbed a new all-time high. We came back, we tested again. And so I called this the cliff because if this has become a major support band, and if we lose it, it's kind of a cliff, and this 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 white level here is kind of the next natural stopping point. Again, back to that technical analysis break check, and then flipping through, we see Ethereum kind of has the same exact thing, and you're going to notice these charts look very familiar, and there's definitely that should be noticed. But we had an all-time high pump. We tested the cliff. We went up again, and we came back and started dribbling along the cliff. And then over here in, wrong AVAX chart. Over here in AVAX, same thing, except, we pumped. We got our all-time high, which was smaller, but AVAX being more young and on the fringe, that kind of makes sense. But we got an all-time high. We came back, tested the cliff, went all the way up, grabbed a new one, and then worked our way back down. So what I've been watching is, as I'm pretty sure we talked about on this show, we had this massive event, the Terra Luna collapse, and that happened about a month ago. And when that happened, that was enough to push AVAX off the cliff. So AVAX fell off the cliff way back here, May 7th, 8th, 9th. And it was like once we'd lost the cliff, you can kind of see this is the daily candles. We were coming down pretty fast, but once we fell off the cliff, like it was 4 days of just straight nosedive when we fell off there. And so now we are starting to level out. I don't think we're done, but we're hitting this first level here that I marked out at $14, and we're slowing down. And then if we go over to Bitcoin and Ethereum, most recently, both of these guys have finally, and I was waiting for it for so long because AVAX was, wrong AVAX. AVAX was so far ahead of those two in falling off this cliff that I was like, just watching the Bitcoin chart and back here in this time frame here where it's just dribbling along and it's not doing anything to get back up and regain this $35,000 level. I was just waiting and waiting and waiting for this to start happening. So this did start happening. That was June 12th that Bitcoin officially fell off of its cliff. And similarly, Ethereum is falling off of its cliff. And it fell off about a day before, June 11th, June 12th, same time frame as Bitcoin. So how I interpret the lack of response in crypto to what just happened in equities is a little bit of they fell off their cliff, so they're already in nosedive mode. There's probably a lot more to this, and so these are just my thoughts, certainly not seasoned or professional. But we're already falling off. And so now going back to that analogy of the rubber band, we're already stretched. And, now another bad news thing happens. We're still way stretched. So maybe instead of dropping, we're stretched too far. But now also maybe instead of bouncing back higher, we're just kind of going to hold this stretch amount. But it's also worth noting both of them, both in the case of Ethereum and Bitcoin, are testing right now. They're testing a previous flipped level, resistance, flip support. So, there's things like that play in where there's just those external factors that drive the price that it's challenging against. And sometimes, I guess maybe an analogy is kind of we talked about with earnings season. A stock that hits earnings and hits a catalyst moment in earnings, if it's mid-level, you're probably going to spring up or down to the next level. But if you hit while you're on a level, maybe you get a little less action. So I kind of interpret it that way, or something to that effect. And then obviously, AVAX, I feel like we're bottoming and there's just no money left. So and the last thought I have is everything's in stages in crypto, all the way from US dollars, all the way, we're going to call AVAX deep into crypto because it is a very speculative, very on the fringe token at this point. So US dollars, then Bitcoin, then Ethereum, then AVAX. And that's how the tide comes in. The water flows into Bitcoin, it flows into Ethereum, it flows into AVAX, and the tide goes out. AVAX got drained already. Now Ethereum and Bitcoin are draining. And as to why I don't think they reacted as strongly to the Fed news is, first of all, the tide's already going out and they're kind of testing these previous levels.
It's a good theory. I'll subscribe to your theory if it makes you feel better.
Yep, it's official now.
Yep. I think that's a consensus. That's a unanimous decision. Therefore, it must be the expert opinion. So that brings us to the end of this week's episode. Hope you kind of enjoyed a little bit of our perspective on the Fed action, what that means in the market, where we kind of stand with respect so far this year to kind of past years. And if you're out there feeling discouraged like I am, you know, you can at least find a little bit of comfort in some of that price charts that we kind of showed, that like this has really been a brutal 2022 start. I mean, all around the board, you have to go back really far in the market history to kind of see similar price action to this. So one thing we always say is to make sure you manage your position sizes. Don't let them get outsized, because that's how you stay in this game day in and day out through the thick and the thin. Right now, we're really in the rough stuff. So I'm pretty happy to still be playing the game. I wish there was a little more action and green to make me kind of feel a little bit better and win a little bit more than I have been. But I'm really just kind of holding my little I'm really just holding things kind of close, waiting this out at this point, because I just don't have the capacity in my mental brain to really kind of trade this trend that's going on right now. I hope that we'll kind of fully subside here soon, and I'll be right back at it, and I look forward to that day. If you're adventurous and you're charting out there in the waters, good luck to you. I hope you have a lot of fun, and don't ever forget to think outside the block.